the bull's case. Thank you, Nimesh, for that. Let's move on to Apollo Hospitals. Now, this is a stock that's been reeling under pressure. What has happened is a fairly complex transaction where Advent is putting some money in Apollo Hospitals. At the same time, a promoter group entity on the pharmacy side, that's being merged into ApolloHealthco. So we spoke with the management as well. Let's go across to Ekta to understand the entire structure of this deal and then what the street's take is, what the concerns are and what the management is saying. Ekta, over to you.
Well, I'm going to concentrate on the concerns with regards to Apollo Hospitals and the reason why the stock is down and out despite that big, long-awaited investment by a PE firm coming into ApolloHealthco. Now, most importantly, it's a complicated deal. So there is a merger of the promoter entity, which is a pharma distribution business, Keimed, which will eventually happen into ApolloHealthco as well. So Jeffrey says that ApolloHealthco will need strong execution given the complex structure of the deal. Now, like I mentioned, there is a related party transaction which has taken place with Keimed, a promoter entity, eventually being merged. Now, one of the key sore points is the valuations are lower than what the street was anticipating when it came to ApolloHealthco. So, for example, CLSA says that Apollo Health is at a discount of around 5,600 odd crores as compared to CLSA's valuations. Jeffrey says Apollo Health is valued at around 14,478 odd crores, which is lower than their 17,000 crore SOTP valuation. Now, we did speak to Sunita Reddy. She on valuations indicated that yes, ApolloHealthco is at a discount of around 20% as compared to what the market expectations were. But what it will do is form India's largest omni-channel play, and the timeline of the deal was crucial. Now, the other sore point is the margins. Keimed margins are at around 3.6% for FY23. However, Sunita Reddy is confident that they will improve margins to even 10 to 11% for the combined entity versus the guided 7 to 8% for FY27. So that's how confident they are in terms of pushing up the margins to 10 to 11%. Separately, 25,000 crores is the revenue target by FY27. That is probably going to be achieved via the acquisition route. That is what the street is anticipating, because the combined entity currently stands at around 10,208 odd crores. And that's what Sunita Reddy said. She said that they will be looking at inorganic growth to touch that 25,000 crores. So getting to those large figures is something that the street would want to see quite keenly, as well as a margin improvement. Now, brokerages, quite sanguine about it. Morgan Stanley, overweight, target price of 7181. They say that the deal valuations are lower than expected. We have Nuvama, which maintains a buy and a target price of 7,300. According to them, the valuation was a letdown at $1.7 billion versus an estimated $2.7 billion for Apollo Health. Doubling of Keimed's valuation in a year is aggressive. Fundraise will minimize the 24/7 cash burn, according to them, which is a positive. But they are reducing the pharmacy target valuation from 25 times EV to EBITDA to 22 times, with an SOTP valuation of around 290 rupees per share. So overall, they are also a bit sanguine about it. One will have to see what the execution pattern of this new entity will look, and what the margins and the revenue figure targets, whether they would be achieved or not.
Okay, thank you very much for that. So